Hello and welcome to this week's Market Outlook webinar. If you're watching the recorded version of this, it was held on Wednesday lunchtime, the 19th of October at 12:30. This is a webinar that I do every week in conjunction with Aondo, and it's a look really at what's been happening over the last couple of days and some levels and some trading opportunities to keep an eye out on in the days ahead. I think it's been maybe a bit of an odd week, but I think there's particularly with forex. We'll take a look at forex first of all, but I think we're approaching some key levels when it comes to the dollar, the likes of euro dollar and a couple of others. So I think it could be an interesting end to the month, but we'll take a look at those in a second. We'll start off with FX. As usual, though, we'll look at indices and commodities, gold and oil as well. So we'll cover the whole thing over the next half an hour or so. Right, so I just put the risk warning up there, so you've had the chance to read that. Let's have a look at what's going on in the markets. So I'm using Aondo's Trade Hub platform here, so that's where the chart's coming from. But the reason I think it's interesting in FX, I'll talk a bit about some of the stuff I've been doing over the last week, and I did a trade this morning. I thought it was a bit too early, but maybe not, we'll see. But it's to see where the likes of euro dollar, this is euro dollar that we're looking at now, has come over, well, it's really during this month. You know, we saw, to go back yet again to the moves we saw on the referendum vote, the EU referendum, we saw euro dollar drop as low as 109.20 overnight, and then over the course of the summer it recovered up to 113.40. So we saw a 400-point move off those Brexit lows or those EU referendum lows. And clearly, you know, from a charts and a technical analysis point of view, it's left a really, I think, a really big level of support, or potential support anyway, you know, down here. So 109.12 and whatever that level is down there, 109.50, and we're currently trading at 109.70ish. So I think it's one of those things where, well, if the euro is going to turn around anywhere, then this is the place. We may well have a quiet day today, because tomorrow, it's Thursday tomorrow, isn't it? Yeah, so it's the European Central Bank's interest rate announcement tomorrow, so we may well see markets marking time a little bit ahead of here. But I do think, you know, it's interesting that just this month it's dropped, what, 250 points, and we're back to a level that has proved important in the past. So for me, euro dollar is one to watch down here. You could argue that even over the last couple of days or so, it started to turn around. I think it's probably still a little bit early for that. But let's take a look at the hourly chart. So you can see, coming into this week, it was still weak. But as the days have gone on over the last couple of days, you know, you can see how we have seen strength coming in ahead of those old lows. So it's not a trade I would do today, but if you really had to do a trade on euro dollar, for me, then maybe the one, if you think, you know, we're getting towards what has been an important low in the past, is to be a buyer now with the stop below the lows for this week. So far, if you really do think that trend has ended, personally, I'd still be tempted to hang off, hold off, and see what tomorrow brings with this, the ECB and everything else. But you know, we're back to a zone where if it's going to bounce from anywhere, then this is the place. You know, and I think if we lose these sort of levels, sort of 109 levels, it does open up. I mean, there was a lot of support, you know, back in the 107, 108 area. But I think if we did go below the EU referendum low, we could see quite a sharp move lower, because you'd guess a lot of people will be looking at this and thinking the same way. You know, we're back to levels where the buyers step back in over the last 4 months or so. So, you know, you have things like maybe lots of stops under 109, that sort of thing. But it's an interesting one to watch, I think. But for me, for my money at the moment, I'd be leaning towards being a buyer, but I wouldn't maybe be doing anything just yet. One I did do this morning, just sticking with sort of big levels in forex. We'll talk about dollar Canada, the dollar Canadian dollar. I've talked about this a bit over recent weeks, because I think it's quite confusing in a way, because there's been great trends in dollar Canada. You know, we had this massive trend up through 2015. Let me just take this out a bit further. Let's see if you can get a feel. There you go, for the size of the moves. I mean, look at that. massive moves that started in 2012, great trend up, and then much of this year we've seen the price in decline. But if we looked at the dailies on the dollar against the Canadian dollar for this year so far, we are still in this uptrend. I think that I've mentioned a few times. If we took it from the lows of May this year, then our uptrend, looks something like that. But it's really struggling, with these old highs from on the way down, around about sort of this sort of level. Let's just plonk one on. But I still think, the momentum is still out there. You're sort of 133. That sort of area. It sort of has a little push through. That then it sells off again. So I've been keeping an eye on, looking to basically to buy, banking on another move up to 133. I mean, I think the more conservative approach is wait for 133 to be broken, rather than maybe trying to second guess it. But the trades that I did this morning, so if we look at, and I still think I'm a bit early to be honest, but the dollar had been losing ground against the Canadian dollar over the last week. It's come from that 133 area down towards 130.50 over the last couple of days. But we have seen something of a bit of strength over the last couple of days, and I was sort of banking on this bit of strength, this move from yesterday, pull back in the afternoon, that saw the buyers come in again a bit earlier. I was banking on, well, maybe this is just the start of a reversal. So my idea is, and again, I do think I'm a bit wrong. I'm a bit too early on this, but I'm in at 130.92. It's currently 130.85, and I'm going to see if this level holds. So my stop is the other side of 135.50. So I've got maybe 50 points risk, 50 or 60 points risk. But if I'm right and it runs back up to 133, then 200 points potential upside. Let's see. So far, I'm not right. And it was almost as soon as I put it on, I thought, am I really being a bit early? I was buying here. This is the 10-minute chart now. So it came back to where it held this morning, the early hours this morning. That's yesterday's low. That's where my stop's under, and I bought in there. And of course, as soon as I bought, it fell. So we'll see what happens. But I think this level here, this 130.50 level, is the one to watch. I should maybe have been a bit more patient on that one. But it's another example where we have, a forex pair hitting potentially or getting near to what could be a big level. The other one, let's take a look at pound against the dollar. Clearly, that's been moving over recent days. We had a slight increase in unemployment today, I think, didn't we? But we also had that news yesterday. Inflation came in. Everyone was expecting it to go up, but it came in slightly more than was expected. So let's see how that changes the picture for pound against the dollar. I still think it's a market that we've got to be a little bit wary of. After the massive plunge took out those again the post-Brexit lows around about, where was it, the 128 mark down here. I've zoomed out a bit too much. So this is the daily chart we're looking at here. Let's have a look at the hourlies, because I think it's all a bit confusing since the flash crash from a couple of weeks ago. It's quite a difficult one, I think. But there are some big levels. I mean, it's putting on, it's having a go at breaking through some of these big levels. Just earlier this morning, it hit its best level in a little over a week. So there is strength there. And I think again, if you look at the psychology of the market, I think whenever it breaks through a big level, people are so bearish at the moment. There's maybe a bit of a scrabble, to close out any shorts. So if we had that spiky low, that spiky high there, 123.30, just before the flash crash kicked in and it fell off a cliff, you'd think, well, if it can get through 123.30, we can start looking at maybe a return to 123.50, 124 levels. But I must admit, it's one at the moment I don't pay that much attention to during the day, because I just think it's all a bit too volatile for me and a bit too messed up after the flash crash. I think if we can clear the 125 level, then we can start talking. Sorry, that was the flash crash there. The 125 level. I think then we can start looking at the potential for a much stronger recovery. But I think while it's below 125, there are just so many hurdles for the pound against the dollar. It's difficult to be too bullish on it. An old favourite from some sort of weeks gone by is New Zealand dollar, US dollar. And let's have a look at the maybe the longer term picture on this, because this is an interesting one. If we go to look at the hourlies, maybe, where maybe I think, and I missed it. I was watching it, and it happened so quick in the early hours of Monday morning that I missed it. But maybe there'll be another chance. But this is another one like dollar Canada that's had a definite uptrend in place for most of this year, and the chart looks something like this. And what's happened over the last couple of days, the last few days, it's come back to that trend line, and the trend line has held. So it's sold off from 75 down to sort of 70.50. So we saw a 450 point decline. But that old trend line has held. The old lows from back here held as well. So for me, while the New Zealand dollar, US dollar is above this 69.50, 70 level, it remains a buy, but it just turned around a bit too quickly for me. If it had come back and retest it, I could have been a buyer with the stop underneath here. But it could happen later this week. But for now, you'd expect the market to rally and maybe push back up to these old highs. So New Zealand dollar, US dollar is definitely hanging on to that trend. A final one, Euro Canada. I want to talk about this one because this is one that I don't look at very often, but I did a couple of trades on it last week, and I think like some of the other currencies at the moment, it is near a big level. So this is the Euro Canadian dollar, and I think it's always interesting when you take the US dollar or the pound out of the mix at the moment, and like with the US dollar, we've seen the euro, come off 500 points in the last couple of weeks against the Canadian dollar, and back to what has been a big level around about the 144 mark. So again, it's interesting. Are we going to see a euro rally from here? I thought last week we were going to see a euro rally, and ended up buying. Where did I buy? I bought because it broke through the previous day's high. So I think it was here, around 146.10. Because it broke through the previous day's high, and I thought, well, maybe the market will start to rally. But I did have, which is rare for me, a stop and reverse below the lows. So the lows were 145.70. So I got stopped out for a loss of 80 points, and then reversed it, and ended up being short automatically. And of course, you can do that with brokers. And it ended up being almost a perfect trade because the market just fell off a cliff. So again, I think it's interesting to watch how markets perform around these big levels, because a lot of people will be watching the same thing. And if you get a move through, often it can really accelerate. So for me, Euro Canadian dollar is an interesting one, like Euro dollar, because we are getting back to what had been such big levels for this currency pair. So I think hopefully, when we come back to this next week, we'll see that they've held or they've broken. The assumption, from a technical point of view, these levels are going to hold, in euro dollar, Euro Canadian dollar, dollar Canada. Let's see in a week's time where we are. And one quick one before we go and have a look at some stock markets. Euro sterling. I just think it's been a little bit boring, Euro sterling. You had that surge again on the flash crash, and look at it since then. It's just been relatively tight ranges. It doesn't change the trends, in Euro sterling since November last year. We've still got a market that's doing that, it's in an uptrend and it's accelerated, So I'd still be inclined to be a buyer on dips of the euro against the pounds. There you go, there's one place for your stop loss. The lows from the 7th of October, just ahead of 88.90 if you really wanted to buy it today, but it just looks like it's got a little bit becalmed, I think, euro sterling. Anyway, let's take a look at stock markets. So I think FX, we've got the European Central Bank tomorrow, but the euro is near some major levels, so I think we've got an interesting couple of days ahead. Let's take a look at stock markets. I think it's quite confused at the moment, and confused you could almost, I think, translate into boring. A lot of what I do, I look at FX pairs, but I do trade quite a lot of US shares over medium term, and I mean like weeks and sometimes months. So take a position in a trend and look to follow the trend. So I do keep an eye during the day on what US stock markets are doing, but it's just dull at the moment. It's really dull. We've seen we had the big move in September by stock markets. There we go, where it really did sort of fall off a cliff, and since then This is the S&P that we're looking at. You can see the market, it came back down to test those old lows, around 2112. And it's just trapped. It's just almost trapped in the middle. It's trapped by those extremes that were set over maybe a week and a half at the end of September, and it's just stuck in that range. So I think it's a difficult market to call at the moment. The fact that stock markets sold off and the old lows held, that's good, but it really struggles to make much headway. You know, I think we've seen a reasonably positive couple of days, and for me it's all about how it performs during the levels on the day. You know, the previous day's high and low is always a good one to keep an eye on. And I just think at the moment, until we get a definite breakout of this range that the market's stuck in, I just think it's, you know, destined to be something of a boring market. I'd have to say, you know, I would think, and if we took a bigger picture view of this, I would expect the market to go up, because historically that's what stock markets do, of course. But if you look at the trend of the Feb lows, I suppose, I mean, you could say that, I mean, that trend line has been cracked. But for me, while the 2105 level holds on the S&P, the trend is still up. We've still got higher highs and higher lows. So I would think we'd see the market push back up to the highs from the summer. But at the moment, it's going nowhere fast. So I think it's one of those markets. It's good if you want to maybe sit there and watch it all day long and nip in and out during the day and look at big levels like previous lows, the previous day's high and low, that sort of thing. But I think it's just it can be a frustrating market if you're looking for a move over days and weeks, because it's just not going there. So I think the S&P, US markets, more sideways stuff. The Dow, I mean, the Dow is going to be the same, pretty much the same, obviously. You know, if we have a look, if we go back and we see that big fall at the end of September, and a market that's just sort of corkscrewed its way since then. You know, it's almost as if you bought or sold it and held for a little bit, you would have an opportunity to make money, because the market's just chop, 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 chop. But the danger of doing that is if you suddenly you get a sustained move and you're the wrong side of it, that's the risk. And look, we're almost bang in the middle. You know, that the high was what, 18,470, the low was 17,920. So 500. We're almost bang in the middle of that range. So it is, I think, something of a flip a coin from here. You know, if it dropped back towards 18,000 again, or slightly below 18,000, you want to be a buyer. If it rallies up much above 18,350 into this sort of area, you want to be a seller. But at the moment, it is a market that's just doing nothing. There are ways of trading sideways markets. You know, I've spoken in the past about using options and things, and I've done an options trade yesterday on the S&P that doesn't run out until the middle of November, and it's basically banking on the market trading sideways. But there is the US election before then. But I think it's quite a difficult market to trade from a directional point of view. So US market still very much flat. FTSE 100 is an interesting opportunity yesterday. Again, I was a bit premature yesterday, but I think on the FTSE, we'd had, you know, clearly we're coming off these all-time highs on the FTSE. The weaker dollar is pushing the UK stock market higher, or the blue chips higher, and the market had sold off. And then we saw a move day before yesterday, which broke the previous day's high. So again, as I've mentioned before a few times, you know, for me, it's not rocket science. If a market breaks a previous day's high, it suggests that sentiment is a bit more positive today than it was yesterday. If it breaks a previous day's low, it suggests that sentiment is a bit more negative today than it was yesterday. But the fact that it broke the highs on, and that was it Monday? Broke the highs there. And then it came back down. So I was looking to be a buyer, and I ended up buying at 69.50 here with a stop under the low from the previous day. Pretty much the same as that Canadian dollar trade. As usual, a little bit too early, and the market did slip a bit lower, about 20 points against me, but has pushed up and recovered yesterday. So I'm still in it. I've given back about 30 or 40 points of profit so far, but I think I'll be looking for a run back up above 7,100. Let's see what happens. But I think it's an interesting level down here. You know, these old lows from down here have held. I think if we do see it slip much below 69.50, it maybe opens up a much sharper fall. But maybe slightly more interesting than the US markets, but stock markets are something of a struggle at the moment. And the same for the DAX. Just to round it up on stock markets, we have had something of a trend on the DAX over the last week or so. But even though that trend is still up, considering where it's got to, and we had, there was a little pull back to the trend line earlier this morning. So for me, my money would be for the DAX to push back up to the highs again, the highs from maybe late yesterday, but just to be aware that we're back in an area that has been something of a struggle for the DAX, so we're ahead of 10,700. And if US stock markets don't go anywhere, it's difficult to see European stock markets deciding to, suddenly do their own thing and push a lot higher. So I think the DAX and the FTSE, there's an argument for them to squeeze a little bit higher from where we are now, but just be aware of the resistance barriers that are around from the last sort of couple of weeks or so. Right, commodities. I think these are both interesting. Gold and oil are interesting at the moment. If we look, let's deal with gold first of all. So I've mentioned a lot in these webinars. The trend for gold. How far back do we need to go? Maybe a year. So the trend for gold, I think we have seen it reverse over the last year. So for many years, the trend for gold had been sliding down. We'd see the odd rally, but it would just run out of steam. But this year we have seen much more sustainable rallies. And then we saw it just the other week, a couple of weeks ago, take a real bashing and slide, which has dented, I think, that trend line, or has broken that trend line, I should say. There we go. Because that was doing a reasonable job during the summer. The whole sort of 1300 mark was doing a good job of holding gold up. Then we saw this sharp sell-off. But I would argue the definition of a trend isn't really a slopey trend line. It's higher highs and higher lows. And we still have higher major highs and lows. And for me, I think the level I mentioned over the last couple of weeks was whether the lows after it had fallen sharply would hold. And I suppose, again, the aggressive trade here, if you believe that this is something of a knee-jerk reaction in gold and it's overdue a recovery, the aggressive trade is to be a buyer. I think it was pushed to a 2-week high today. Be a buyer with a stop loss under the most recent low is one. So personally, I do still think that we'll see gold back up and through 1300, but maybe it'll take a bit of time for confidence to build back up. I'd only change my opinion if we saw its, sort of a medium to long-term view. If we saw it slip below these earlier lows from much earlier in the year, sort of February, May lows, around about 1200, 1190. So I still think the trend is just about still up, even though that trend line's been broken. One to watch over, is it the US one we need to look at? I think over the next, about November, there we go, the next couple of days is oil. This has been, I think, maybe something of a confusing market over the last few weeks, but a really interesting market in the first half of the year. We saw that major slide in oil that saw it, briefly down to $26 a barrel back in January, and then suddenly the whole world and his wife seemed to be short oil and expecting it to fall. Then, of course, saw the market rally sharply back up to the 52 area into the summer, and then run out of steam. And where are we now? We're right back up here now. So if you're bearish on oil, it's a perfect opportunity to get short, because it's trading at $51 a barrel. That big level is 52.28. So if you think that the price of oil is going to run out of steam, this is the place. And if it is going to be weak, it shouldn't take out those previous highs. By definition, it shouldn't start trading at fresh highs for the year if it's going to start a run lower. So I think it's a really critical point for oil. So the aggressive trade is to be short up here at 51, with a stop maybe, I don't know, 53.5, 54, something like that. But I think if we do see a move to that 53 level, we have to start saying, well, actually, this is the start of potentially the next leg higher in oil, ultimately, well, not ultimately, but with the next target of sort of $63 a barrel from the summer of next year. So this 53 level is a really crucial one for the price of oil. This is the US November contract I'm looking at. So there are lots of different oil contracts to trade, but I think that's the front month at the moment. So I think 53 is a big one to watch for oil. So it's an interesting one in the days ahead. But if I had to do a trade, I'd be short, but with a tight stop above that level. But we'll see. We'll see what happens. So we'll start wrapping things up. But in summary, I think FX, maybe the next couple of days, the FX markets are the ones to keep an eye on, particularly the likes of euro dollar, because it's pulling back towards those EU referendum lows to see how it reacts down here. So I think it's definitely a very interesting one. I think down at these sort of levels. If you want to take the US dollar out of the equation, it's a similar looking setup on the euro Canadian dollar, pushing back. There we go, pushing back to sort of what have been fairly significant levels there. Stock markets are still a bit mixed with US markets, and ultimately they will be the driver, just going sideways. So it's a difficult one to call. Oh, someone's asking about Aussie dollar. Aussie dollar, pretty much the same as we've seen over the last few webinars. I think it's still strongish. It gets battered back, but these old supports hold. But this 78 to 78.5 level is really a massive one for the Aussie dollar, because we've seen maybe the trend started to reverse, and we want to see a proper move through 78. So you could say, in an argument for the bulls, it's not fallen away heavily from this level the same way it did earlier this year. So I think maybe it is getting poised for a push through. A proper push through that 78 level, I think, the Aussie dollar. But we'll see what happens over the next few days. And the other interesting market to watch, stock markets, a little bit flat and boring. Maybe we'll spice up after the European Central Bank tomorrow. The other interesting market to watch, I think, is crude oil, because it's up at these highs from early in the year, so it's really going to be something of a critical point. But we do have tomorrow, the main event for this week that's left this week is the European Central Bank decision tomorrow. It happens at 12:45, but it's the press conference that starts at 1:30. That's the one that tends to inject a bit more volatility potentially in markets. So we'll see if it affects those big levels for currencies. But it's coming up to me being talking for about half an hour. So I'm going to wrap things up there. If you have any questions, feel free to drop me an email. I don't have all the answers, but I'll try and answer or point you in the right direction. My email address is david@tradeafter.com. On Twitter, I'm at Jones the Markets, and I'll normally try and put up interesting charts if big levels are being broken, or trends are reversing or continuing. I'll try and put up interesting charts on there. Next Tuesday night, I'm doing a social trading webinar with Aondo, so I'll put that on my Twitter feed as well. But if you go to the Aondo webpage, there'll be information on that there, and we'll talk a bit more about social trading. But for this week's market outlook, we'll wrap things up. I hope you have a profitable rest of the week, and hopefully you'll be back and we'll do it all again this time next week.